Welcome back to Finance Sensibility. Today we're diving deep into a question that's been on everyone's mind. Is it still worth investing in cryptocurrencies in 2025 or 2026? Whether you're a seasoned crypto investor or just curious about the digital currency space, this video will give you all the insights you need to make an informed decision. We'll explore current market trends, the potential risks and rewards, and even throw in a few fun facts along the way. So let's get started. In the last decade, cryptocurrencies have gone from niche digital assets to mainstream investments. By 2025 and 2026, we're seeing a very different landscape than we did back in the early days of Bitcoin. Cryptos like Bitcoin, Ethereum, and even stablecoins have found their place in portfolios worldwide. But as with any investment, the question remains, is it still worth investing in cryptocurrencies now? To answer that, we need to take a closer look at where the market is today and what the future might hold. To understand whether investing in cryptocurrencies is still worth it, we first need to take a look at how the market has evolved up to 2025. Increased institutional adoption. Over the past few years, we've seen an explosion of interest from institutional investors. Companies like Tesla, PayPal, and even Visa have embraced crypto. Hedge funds and pension funds now consider it a legitimate asset class. This institutional backing has stabilized the market somewhat, reducing the volatility we saw in earlier years. Example, in 2021, Tesla made headlines by purchasing $1.5 billion in Bitcoin, and by 2025, institutional investors have diversified further into Ethereum and other digital assets. Regulation is finally here. By 2025, regulations around cryptocurrency are much more defined, particularly in the US, UK, and Canada. While regulation may sound scary to some investors, it's actually helped reduce scams and shady projects, making the crypto space safer for everyday investors. Decentralized finance, DeFi, and NFTs. Decentralized finance, DeFi, has continued to grow, allowing individuals to lend, borrow, and earn interest on their assets without a traditional bank. Non-fungible tokens, NFTs, have also grown in popularity, but they've shifted focus from speculative art sales to tokenized real-world assets like property deeds and even stocks. So should you invest in cryptocurrencies in 2025 or 2026? Here are the key factors to consider. Diversification. Cryptocurrencies can be a great way to diversify your investment portfolio. With their low correlation to traditional stocks and bonds, adding crypto to your portfolio can help spread risk. Example, while the S&P 500 might rise 7% in a year, Bitcoin or Ethereum could see double or even triple those returns, though with higher volatility. Potential for high returns. The crypto market is still relatively young, and the potential for high returns is real. Bitcoin's price might not skyrocket like it did in the early 2010s, but many analysts predict a steady rise as it becomes increasingly scarce due to the Bitcoin halving event and more widely accepted. Technological innovation. Blockchain technology, the foundation of cryptocurrencies, continues to evolve. Ethereum 2.0, for instance, has transitioned from a proof of work to a proof of stake model, making the network faster and more energy efficient. This could drive up the value of Ethereum in the coming years. Fun fact, Ethereum processes around 1 million transactions per day, and with the upcoming upgrades, this number is expected to grow significantly. Risks remain. Cryptocurrencies are still highly volatile. Prices can swing dramatically in short periods, making it a risky investment for those with low risk tolerance. Example, in 2021, Bitcoin's price fell from $60,000 to $30,000 in just a few weeks. While it rebounded, these swings are not for the faint of heart. Fun and surprising facts about cryptocurrencies. Let's switch gears for a second and talk about some fun and surprising facts about cryptocurrencies that you might not know. Fun fact 1. Did you know the first ever Bitcoin transaction was used to buy pizza? On May 22nd, 2010, 10,000 Bitcoins were used to buy 2 pizzas. That same Bitcoin would be worth over $600 million today. Fun fact 2, there are over 20,000 different cryptocurrencies in existence today, but Bitcoin and Ethereum alone account for more than 60% of the market's total value. Fun fact 3, if Bitcoin were a country, it would rank 30th in the world in terms of electricity consumption. However, newer cryptocurrencies like Solana are working to reduce the environmental impact of blockchain. Practical tips for investing in cryptocurrencies. Here are some practical tips if you decide that investing in cryptocurrencies in 2025 or 2026 is right for you. Do your research. Not all cryptocurrencies cryptocurrencies are created equal. Before investing, research the team behind the project, its use case, and its long-term viability. Stick with well-known cryptos like Bitcoin and Ethereum if you're unsure about riskier assets. Don't invest more than you can afford to lose. Cryptocurrencies are still a volatile asset class, so only invest money that you're prepared to lose. For most people, that means keeping crypto as a small portion of their portfolio, maybe 5 to 10%. Use dollar cost averaging. DCA. Instead of trying to time the market, use dollar cost averaging. This strategy involves investing a fixed amount of money at regular intervals, which can help reduce the impact of market volatility. Example, if you invest $100 into Bitcoin every month, you'll buy more Bitcoin when prices are low and less when prices are high, averaging your cost over time. Store your cryptos safely. Consider using cold wallets, offline storage for long-term holdings. Exchanges can be hacked, so storing your cryptocurrencies in a secure wallet reduces the risk of theft. So is it worth investing in cryptocurrencies in 2025 or 2026? The answer depends on your financial goals and risk tolerance. If you're looking for long-term growth and don't mind volatility, cryptocurrencies can still be a valuable part of your portfolio. However, it's important to diversify, do your research, and only invest what you can afford to lose. Remember, this market is still evolving, and there's a lot of potential on the horizon. If you want to dive deeper into the world of cryptocurrencies, I highly recommend reading The Bitcoin Standard by Safety and Amos. It's an incredible guide to understanding the broader implications of Bitcoin and why it might still be one of the best investments for the future. Thanks for tuning in to Finance Sensibility. If you found this video helpful, make sure to like, subscribe, and hit that notification bell so you don't miss any future updates. See you in the next video.